Hi everyone, I'm Thomas Pulawek, Head of Multi-Asset Solutions for Asia Pacific at T. Rowe Price. Today I'm joined by Ernest Young, Portfolio Manager of the Emerging Market Discovery Equity Strategy, and Leonard Kwan, Portfolio Manager of the Dynamic Emerging Markets Bond Strategy, to discuss what 2024 holds for investors in Asia. From a multi-asset point of view, the global market environment is currently in a wait-and-see mode. As the Fed considers its next move, there is continued uncertainty about what inflation and recession risk. We think that this is not the time to take large bets in asset allocation and try to be a hero.
Indeed, I think market is transitioning to a new regime characterized by higher inflation, higher rates, and low growth. But with this uncertainty, there's still significant opportunity for investors to adopt to this new regime.
That's right. When it comes to emerging markets fixed income, staying invested with a mid-duration posture and actively managing volatility risks will be key to navigate this complex environment. But before we dive into that, let's address the elephant in the room. Thomas, what is your outlook for US equities?
We think US equity market valuations will continue to be in focus. The Magnificent Seven tech stocks have distorted valuations metrics to the extent that they have become a separate asset class. However, when considering the broader context, valuations of US stocks, including mega-cap tech stocks, do not appear unreasonable. Opportunities can still be found in companies that can maintain recent improvements in earnings growth. As stock-bond correlation is constantly shifting, it's crucial for investors to stay diversified. Our multi-asset portfolios reflect these four key themes: overweighting cash for liquidity and flexibility amid recession uncertainty, seeking attractive yields through high yield and emerging market bonds, mitigating inflation risks with real assets, and overweighting selective opportunities, including Japanese stocks. Ernest, Lenny, what are the key themes in emerging markets and China?
For emerging market stocks, I see fixed asset spending being an important theme. The trend of deglobalization and the transition to green energy are creating a pressing need for capital spending. The multi-year investment cycle driven by long-term trend will provide a tailwind for emerging market value equities. While China has faced structural challenges, the period of intense regulatory scrutiny has largely peaked. The government is now focusing on protecting economic stability. So despite near-term weak sentiment, there's potential upside for Chinese stocks, especially considering their cheap valuation compared to history. I believe the next phase of market dynamics will shift back towards bottom-up stock picking, unlocking opportunity in the broad EM equity markets.
For EM fixed income, the macroeconomic outlook remains uncertain. However, I expect disinflation combined with resilient job growth and expansionary fiscal policies to counter slower growth caused by higher policy rates. China is intensifying policy measures to support growth and mitigate the effects of real estate deleveraging. With a steadier China and solid growth in India and Southeast Asia, emerging markets are regaining their status as attractive investment destinations. Emerging markets fixed income has shown resilience in this cycle of higher core rates, offering potentially robust total returns in 2024. Staying invested in mid-duration bonds will be a sensible approach. However, it is important to note that fixed income volatility is likely to remain high in 2024 due to uncertainty and geopolitical risks. Investors should be mindful of these factors, including the upcoming US election cycle and stretched sovereign balance sheets. A risk-conscious and diversified approach is necessary to manage volatility and identify opportunities.
Thank you, Ernest. Thank you, Lenny. I think we can all agree that the market is transitioning to a new regime. Prudent asset allocation, identifying companies with positive catalysts for change, and actively managing downside risk are crucial to navigate the new environment. We look forward to keeping you updated on our investment thoughts in 2024. Thank you.